Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 22nd of December 2015. Okay, so today we're going to be taking a look at the 4-hour chart of the New Zealand dollar. Always start your analysis by zooming out so you get a better idea of the different structures and areas on the chart where there may be some traders that are trapped. This pair, as you can see, has been in a long-term downtrend. Okay, so as you can see, price has had a bit of trouble trying to break this 0.6800 level, and although it has been above it on several occasions, it's never properly broken out. And here we are having another attempt at that level. The market tends to have some decent symmetry, and if we look at this move higher compared to this move higher compared to this move higher compared to this move higher, usually when we do get that impulsive move up, we get a correction, and this is the type of market state that I'd refer to as a downtrend volatile market state. Although in the short term it's a volatile uptrend, meaning it doesn't advance that far before it gives back an awful lot of its gains. And if that's right, and my understanding of market state analysis is correct, then we could be in for some type of a retracement in and around this area here. Also, if we think about it from a reactive trader's point of view, would have very much looked like it was correcting at the hard right edge. So the hard right edge, if you were looking at price as it was playing out. And as you can see, it would have looked like it was selling off there to the underside of this level, but then it broke higher, tried to sell off again at the 50% level, broke higher, tried to sell off again at the 61.8 level, and then broke higher. Now, if you think about where traders here would have placed their stop losses, it's either above these structures or certainly above this high up at 68, 36, 40 area. So if you imagine that you took a short in this area here and you're still in this trade, you're now getting pretty badly squeezed against your position. So psychologically, there's a lot of people getting stopped out under pressure, and those stop loss orders, if you were a seller, would be buy orders. So when you place a stop loss order, always remember it's not simply closing out your trade. The opposite to whatever position you took is the transaction that is occurring when you get taken out of the trade. So if you're selling, it's a buy order. If you're buying, it's a sell order. Now what that does is that provides demand up and around where the stop is. So it's likely that prices will be dragged above these levels here. However, that doesn't mean that the level's broken. That demand might just be getting satisfied, faking a lot of breakout traders out in the process, and then lower prices could prevail. So the trap we're going to look at today is a trap called the rat trap return, and it's occurring up and around this area here, where traders would have gone long, trading the breakout to the upside, but then those trades failed on them and they've been underwater for some time. We know this to be true because humans tend to repeat old poor behavior. So I'm just going to watch and wait to see what happens at this level. It's not a trade for me yet, but I do like this to the downside. If you'd like to join me in my trade room today, I would love to see you there. Just click on the button below to join me for today's live trade room. Have a great day, and I'll see you there.